But we've got all the Twitter news. Bring on the corporate cyanide. Breaking news, stunning developments in the Elon Musk battle to buy Twitter have shareholders, employees, and anybody following this dramatic story riveted at this hour. First, in a major defensive move, Twitter has adopted a so-called poison pill to stymie the Tesla CEO's $43 billion bid to take over the social media giant. And this afternoon, Reuters is reporting a second bidder has now gone so far as to contact Twitter management about purchasing the company. To the poison pill, rumored yesterday, Twitter has officially put one into place. Now, in case you don't know what this is, and a lot of people don't, so let's explain it. Poison pills, also called shareholder rights plans, make it extremely difficult for big shareholders like Musk, who 2 weeks ago revealed about a 9.2% stake in Twitter, to increase his stake beyond 15% as he makes this hostile bid. Because if he hits 15% of the common shares, the poison pill bursts open, allowing any and all shareholders to purchase more Twitter stock, but at a discount, which in turn would dilute Elon Musk's stake. Twitter says the poison pill does not prevent the company, though, from accepting another better offer, and that's exactly what Reuters is reporting the board might be about to get. According to sources, private equity firm Thoma Bravo has contacted Twitter to express interest in putting together an acquisition offer that would rival Elon Musk's. Here to tackle all these breaking developments, Charlie Gasparino, who's been working the phones, and John Swartz, who yesterday spoke with Twitter employees on what they want, along with Fidelity's John Gugliardi. But first, one of the street's top tech and media analyst, Dan Ives of Wedbush, telling me moments ago that in light of the breaking developments, Twitter stock will open down at the opening bell Monday. Wedbush telling Fox Business, quote, Twitter going down the poison pill path is a predictable defensive measure for the board to go down that will not be viewed positively by shareholders given the potential dilution and acquisition unfriendly move. The board has the back against the wall, and Musk and shareholders will likely challenge the merits of the poison pill in the courts. This gives the Twitter board some time to now run a strategic process, Dan Ives says, and find another buyer outside of Musk, which remains a challenge, although private equity likely interested, which Reuters reports it is. He finishes by saying, we believe Musk and his team expected this poker move, which will be perceived as a sign of weakness, not strength, by the street. Let's bring in Charlie Gasparino. Charlie, what's the word on the street about all of these developments?
This is a particularly horrible company for private equity. Let's be real clear here. So, listen, maybe Thoma Bravo is going to prevail, and I could be completely wrong. But I spent the last 2 days talking to, because we were first to report that this could start a bidding war, because they'll obviously go out and look for, they don't want to sell to Elon. Let's be real clear here. He's culturally too much different than the board and the workers of Twitter. And there's a whole political element here, as you know, he's been attacking Twitter as being restrictive of conservative and libertarian speech. So there's a culture clash here. That's one story. But I've been asking, who's the potential bidders? I've been told, I have a lot of sources in private equity. This is a bad deal for private equity because private equity needs companies with cash flow. Twitter does not have cash flow. I think they have negative cash flow, to be honest with you. They have revenues, but they are a particularly bad company to take private, because what you want to do with a company that throws off cash flow and private equity it's a good private equity target. You want to take them. You want to take the existing cash flow. You want to squeeze it down, pay off debt, then resell it. That's not what Twitter is. Twitter is a work in progress. And, it's a growth company. People buy it based on future expectations. So it's not good for private equity.
What about the poison pill?
The poison pill is interesting, but it's dilutive to current shareholders. And here's the problem that they have. I've been covering Twitter since the day it launched. Okay, I've covered the M&A speculation since the day it launched. They can't sell the company, even though everybody says it would be better off in something else. Private equity is tough for the reasons I laid out. Big tech is tough because guess what? The Biden administration and the Republicans don't want big tech to get any bigger. So it's an antitrust issue. Then you got to look for who would be able to buy it outside of that. Salesforce has said no. Its board didn't want any part of it. Disney has said no because it's too culturally, again, problematic. Twitter, there's a lot of stuff on Disney on Twitter that Disney does not like. It clashes with its brand, and I mean some of the trolling and some of the more noxious stuff. So who can buy this thing? And you know it needs to be sold. Mm-hmm. They're not going to. They may never get another $60 bid again.
As of December, Thoma had about $103 billion in assets.
Right, they have an assets.
This is the private equity outfit.
They have to raise money.
Of course.
And they have to, but again, it doesn't matter how much they have in assets. It matters how you can sell the thing in a public market. And is the company a good target for private equity, which, unless I'm missing something, and I spoke with the top people, it is not. It doesn't have enough cash flow. Look at its balance sheet, which I've been doing. So who is the best person to buy this? Well, Elon isn't a perfect person because he has to sell his Tesla shares or, borrow against it.
And he's that key man at Tesla, which means that really could negatively affect Tesla shares.
That's a problem, and no doubt about that. It's a taxable event if he pays cash and uses his Tesla shares and cashes out. But there aren't a lot of people worth $250 billion.
Can I just say,
and he's got the money.
Twitter shares yesterday closed at $45.08. The annual high, $73.34, hit back in July. So regular shareholders are looking at this saying, well, wait a minute, we were at 73.
Well,
he's under-offered at 50.
The market was
his offer at 54.
highly inflated back then. The Fed was still cutting. We were still printing money.
Of course, but psychologically, they're looking at a 70 print and saying, wait a minute, why is he only offering?
They should be looking at the 45. I mean, by the way, this is a company, to be honest with you, that hasn't really gained in market value since it came public. Mm-hmm. The best you're going to get, I think, is probably 60. So he comes back to them with 60 and make sure the check is real. Okay, obviously, it's not a fake.
It's not one of those big paper ones.
So is the board really going to say no?
Okay, Charlie, thank you very much, Charlie Gasparino.